Hallo, guten Tag. Wie geht's?
So you're speaking German?
Mein Deutsch ist so gut. Nicht wirklich. I haven't spoken German in a good while, but I do understand. I understood everything that was in the presentation before. So I did
Okay,
spend a summer in Baden-Berg milking Kühe and working in a Bauer. So I had a fantastic summer in beautiful Bavaria, and that's where most of my German skills comes from.
okay, perfect. So what is the background of the room you're sitting in? It's looking a little bit like a cathedral or something like that.
Yeah, exactly, like the Heilige, a pink version of it.
Yeah. Sebastian, my first question is, did actually an AI choose your outfit for today?
Not yet. Not yet. It would be nice though, because I'm not a big like clothing person, so I would be actually appreciate if somebody would help me pick clothes in the morning.
Yeah. But did you use the shopping tool that you built together with OpenAI?
Yeah, I mean, I've tested it. You have to remember it's a beta. It was a fun test, right? So I think from my perspective, being at this, I've been doing this for 18 years now, right? So it's been quite a while since we started Klarna. And uh, over the years, I don't think it's often that you encourage new technology that gives you a sense of magic. I had that magic back when Google and internet came in 99, 2000. I was trying Bitcoin and crypto the best I could. I never found it especially magic, in my opinion. It was just a big hype. But when I tried ChatGPT first time in November, it was magic to me. And that just meant that I wanted to make sure that we lean into it and explore it and learn and iterate. And this is one of the fun, amazing tests that we have been allowed to do with ChatGPT to launch this plugin and start iterating on it. And it's taught us a lot. Is the product experience amazing today? I wouldn't say so. It's a start. It's a nice, it's a nice test.
Okay, okay. But do you have like a lot of teams working on this topic already, or is it like in the testing phase right now?
No, we are. I mean, definitely. I think that I know. I saw you had Daniel and Visa on stage beforehand. I think that there is a natural role for a payments network. Like we think about ourselves as a payment network. I think about Visa as a competitor to Klarna partially, and as a friend partially. But I do think that if you think about the very traditional role of American Express, there was kind of this idea that you would walk into your local restaurant and you would wave the platinum card, and then the restaurant owner would be like, "Oh my God, there's a platinum card holder. I need to bring the best wine and the best food, etc." Right? So there was an idea that a payments network could signal to a retailer, who is this customer? What are the preferences? What does a great experience look for them? And I think that's still something that we want to aspire to do, to help empower customers to indicate to retailers what is it that would be relevant for me of everything that you do. And it's in that context that we experiment and try these things. But beyond that, obviously, the whole AI revolution, I think we have like 14 ongoing initiatives within Klarna that are fairly major, that are exploring different use cases in different areas, where of product and shopping recommendation is obviously one, but there's also a lot of others that we see opportunities in how this technology can be applied.
Can you name some more examples?
Well, I think that one of the important things is to not get too theoretical, right? And so to us, it's just like very simple things. I think one thing that's already live that's just, I think is interesting, in my opinion, was that, historically, our customer service agents, when they were answering a call from a customer or chatting with a customer on some topic, we asked them to classify the type of topic in order to help us drive our product development and understand what are the most critical things that we need to fix for customers to be more happy, right? And so they were going through some simple classification process where they were applying and saying, this was this kind of issue or whatever, right? Now, that in itself took a few minutes sometimes, and obviously in itself was an amazing savings opportunity. Why would they sit there and do that if we could train and see that the AI could classify the actual issue more effectively, more accurately than the human would do? So we've launched that, and that in itself was great. We've saved a lot of time. I mean, have to remember we do about 2 million transactions on a daily basis. I think we have a few million, if not more, errands, customer service errands every month. So obviously, if we save 5 minutes on each one of them, it's quite a lot of, and also a very boring task for our human agents to do. We'd rather have them, spend more time and talk to the customers than, classifying errands. So everything in that sense positive. But the big interesting observation with all this to me wasn't necessarily that we saved the time. It was that the classification wasn't slightly wrong. It was dramatically wrong. So we expected this to kind of improve the accuracy of understanding of where the product issues were by a few percentages. It's proven that some of the issues we've had were underreported by hundreds of percentages because that classification was hard to understand, because it was hard to report on, whatever. So what we're getting is a much, much richer and better understanding of what the true issues of our customers are, allowing us to prioritize the right, improvements. And so I think things like that, even if that sounds very basic and people will on Twitter go crazy about much more advanced use cases and, AI becoming Terminator and, whatever, like these are the things that excite me. Like I am keen to, because when you learn that, then you run, oh, but then I can use it for this. And then I think the use cases become more and more advanced as you progress. So to me, I'm super happy even with very basic use cases of that and the learnings from them.
Mm-hmm. So you've built a bank with a branding that looks a little bit more like a fashion brand, and you recently started with Paris Hilton as a brand ambassador. So what is your thinking behind this? Is it a way to be different to other banks and payment companies?
No, I think it is, and obviously media sometimes wants to portray this as something different, but to me it's very, very, very simple. We have an industry called banking. Banking is about trust. And for whatever reason, banks in this industry believe that trust is most best communicated through a middle-aged white man in a suit with a tie in a marble office. That is not what we see consumers associate with trust. And due to the bad decisions and a lot of the bad stuff that banks been doing for the last decades, it's rather the opposite. Consumers have lost a lot of trust to financial institutions and to people that dress and look like that and try to pretend and speak very complex language about things that are actually quite straightforward and try to sound smarter than they are. So in our opinion, we wanted to do something different. We wanted to speak the language of the customers, relate to them on a basis that they found approachable, available, speaking, making complex things simpler and understandable. And so that was part of it. And then in addition to that, if we are talking about a passion and engaging all generations, but let's talk a little bit about younger people as well. How do you engage younger people talking about things like finances? Most of them find it fairly boring. There's a lot of more fun, interesting things to talk about. So if we take the help of Paris Hilton or Snoop Dogg, the likelihood of us being able to have a discussion and get a little bit of attention to topics like financials is just so much higher than hiding in a suit in a marble office. So to me, it's a very clear idea of how we engage with customers in a different world where trust isn't associated to what it used to be associated with. And that's where the brand is coming from.
Okay. At the end of 2021, you started with a shopping app, and in the last interviews now you said it's not the focus anymore to start a super app in the WeChat style. So is it a kind of pivot for you?
Not entirely. I think that it's sometimes, media takes that a bit out of context. So in my opinion, yes, you have had success with super apps in China, right? Apps that basically, but if I open my iPhone and I look at the experience that I have, this is my iPhone, right? And there are a couple of number of icons there and apps that I can click. Like, it's a super app. The Mac OS, the iPhone OS, the iPhone operating system is a super app. And then I have apps within that app, right? Now, the only difference with a super app that instead of using this screen, which is my home screen, I open an app and then I have apps within the app. Like, does it really matter? Well, it does matter in China because what the super apps realized is that Apple isn't that great. Apple hasn't resolved payments. Apple hasn't resolved shipping. Apple hasn't resolved a lot of things. So by making sure that payments work extremely seamlessly, you have to remember that WePay, came from that. It was peer-to-peer. That's how they managed to compete with Alibaba and so forth. So they resolved, if you build if you build an ecosystem and you want people to commerce in your ecosystem, make sure that there's an easy way to trade. Make sure that there are easy contracts and so forth. And Apple hasn't really done that as effectively as the super apps did. And so commerce was more effective within the super app than outside of the super app. And I think that that's the only thing. But in my opinion, Apple is picking up speed. Apple Pay is getting better. Google is getting better. So the whole concept of like, should my mini app live on the iPhone screen or one level deeper behind another app is not that relevant. What's relevant is, what jobs are we doing on behalf of customers? Are we helping them to save time, save money? What am I expecting when I click an app? And we definitely think that we have an opportunity to help customers, connect customers to new brands, to new merchants, and so forth. So that aspiration is as much true as it was back then. But it can happen in many channels. It can happen in different places. And the super app concept in itself, I think is eventually going to be less relevant, because it's also like, okay, yeah, I can have a few icons. I can have my, booking a cab and buying a, order piece of food. I can have it on my first screen, or I can have it one level deeper, but that's pretty much the difference.
So on what other features beside like payments and buy now, pay later you're focusing right now?
So one of my absolutely favorite and critical areas that I believe in law is identification. So I believe that, like, as coming back to what I said about the Amex and the Platinum card, I want to offer an alternative to connect with Facebook, connect with Google, connect with Apple. And we are launching that now, which is super exciting, which is kind of a sign in or sign up with Klarna instead, that allows the consumers to be in better control of their data, and allows the consumers to, if they want to, share data that can allow that restaurant owner or that retailer or whatever to offer a slightly more personalized experience, one that is a little bit more specific to you. And this is not about sharing sensitive data, what your date of birth is or your email. It's more about helping say, this is what this customer usually likes. Which brands do you prefer? What kind of interests do you have? Again, with obviously, consent, GDPR compliant and all that is very, very critical. So you build a trust for it. But I think that's really it. I think a payments company like Klarna can be an important facilitator to allow merchants to provide a better experience.
What kind of companies will be partner for this feature?
So we've launched it. Sorry, I don't think it's probably official. So I'm now announcing something here I shouldn't be announcing. My PR team is going to come and kill me afterwards. But I forgot the name of the first merchant. I think we just took one live. I'm not sure even if it's official yet. So I can't tell you. But very excited about it. I think there's a good opportunity there, to create some competition for these sign up, sign in buttons.
Just a few weeks ago, there was a report in Germany that the number of checking accounts in Germany is about 200K, and it sounded not so much compared to competitors like N26 and Revolut and so on. So how important is the checking account in your point of view for Klarna?
We are learning. It is super critical. But at the same point of time, I would agree with you that, we would have loved to see more than that. So I wouldn't say like, oh, we're super satisfied with that so far. I think, we have new leadership in place now since a year ago, with a little bit new focus. And so I hope to see that will drive some results. But we should also be honest about the fact that, like, one of our challenges a little bit still is that, as a long-term aspiration, we want to build a global retail bank, a global fintech. And so there's always this balance between, like, how good do we get on the local market versus supplying, for example, a debit account and a positive balance or checkings account across all of our markets. And so that's a little bit of a trade-off for us, where it's like, we have to balance between those. And I think currently the focus is now more to bring a basic amount of features to all of our markets and all our consumers, as opposed to go even deeper into improving, specific features in the German market. for the moment being. And that's partially because also, obviously, we are very happily and thankfully in Germany, 80% of the total adult population in Germany is using Klarna at least once per year. We have a relationship with them. So we also feel that, like, hopefully if we do a good enough job, we'll get a chance to come and offer them some new improved products a little bit later, while, we make sure that we set the right platform on a global level to allow us to make this really scalable and get, a great product everywhere. So it's unfortunate. I would have loved to say we can do everything at once and, fix everything at once. But unfortunately, there are some of these trade-offs that you just have to take. So we're happy. We think it's good. We have happy customers. But I would agree with you. Obviously, we would have loved to see more.
Mm-hmm. So in Germany, we have like a kind of battle for the highest interest rates. For example, Trade Republic started an offer with 2% right now for daily accessibility. And as Klarna, you always offered like good interest offers. So right now it's 3.21% for 1 year, but it's not the highest in the market anymore. So are you planning to raise this in the next month and go into that competition?
So to be entirely fair, the problem is that we have been so attractive. And the account that you're referring to is a 12-month fixed account.
Yes.
So we are basically overfunded, which is why we just can't offer more of that product at that price, because we just, we can't find enough return for that. I think, we have so much excess cash on our balance sheet that, so unfortunately, I would love to offer it to more, but we would have to grow the credit side faster to be able to put it all to work. In order to make it, profitability-wise feasible.
Okay, so that's actually also the next big challenge for you, to prove to the market that this whole business model is, can make a profit. So you promised this on a monthly basis for this year. So are you on a good path right now?
Yeah, very much so. And I think, again, look, I think if one have to remember, right? And then obviously media will report about this, like media reports about stuff. But in general, if you look at it, we were in a world where investors were screaming, grow, 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 grow. The only thing we care about is that long-term vision, long-term aspiration. And you still have to remember, we're challenging all of the banks. Like I think partially why there's some more criticism of Klarna in Germany in the last 12 months is lobbying by the banks, because they feel threatened by what we're doing. And we are challenging an industry that is $1 trillion industry, where most of the ownership and the profitability of those banks goes into very wealthy families that's been around for a long period of time. So if we are successful, we are threatening a lot. And in that context, however, back in the days 2 years ago, people were saying, grow, grow, grow. We see that big opportunity. We don't care about your profitability right now, so just invest. And we were investing so heavily that we had a loss on a monthly basis. The worst month we booked was 150 million euros. 150 million euros, that's on an annual basis, about 1 billion euros. That's obviously a huge amount. But on the other hand, if you consider the fact that investors at that point in time were giving us a valuation of 50, that means a 2% dilution for our shareholders on an annual basis in order to go and try to go for that $1 trillion opportunity that's in front of us. So from that perspective, it wasn't that crazy as it may look. But then obviously as investor sentiments shifted and people said, no, we want to see profitability, we had to make changes, right, to your point. And I think that the interesting thing here as well is that Klarna was profitable up until 2019. So most of that money that we were investing heavily was going into fast growth and accelerating our growth in the US, which now is our largest market by revenue. But unfortunately, some of it was also investment in new products and services, which is why we had to take the tough decision of parting ways with some of our great colleagues that we had hired, which was very painful, emotional on various levels, and had to reset the company for a different environment. And, we are very much going towards that. So we booked a very low loss level in March. I don't think we've announced our Q1 yet, but it has a significant improvement. And we feel still very committed to and believe that by what we refer to summer, which gives us a little bit of movement, people can define Sweden summer is June, or I think in Germany it's August, and maybe somewhere else it's September. So it gives us a little bit of flexibility to exactly what month that means. But But yes, within summer, we will be able to book a positive month. And then hopefully, you know, whether we do a full positive year or next year's positive, we'll see. But feel very, very committed and very thankful to everyone at Klarna that is here that has contributed to that.
Mm. But the layoffs were like last year. So what are you doing inside the company to get to that goal of profitability?
So a lot of it is, so that's totally accurate. You're spot on. We did those changes. We did changes to marketing costs. Since then, we knew that actually, ironically, with the, you know, one is that we didn't have great gross profit in markets like US, so new markets, which is very typical for us. We saw the same in Germany. Germany took us a long time to make Germany work.
So what is the reason for this?
There are multiple things, but obviously one explanation is as you onboard new customers versus returning customers, it is a little bit more difficult from an underwriting perspective. So you are going to see slightly higher losses. And if you're in a new market, your proportion between new customers and returning customers is just going to be much more on the new customers. So your numbers will look worse by you know, naturally. And then so that's one part. And then it's just in general, like the focus on that. But what we've seen is a dramatic improvement in gross profitability in the US. And then the ironic thing is, once you start getting really good gross profit on your products, then actually one of your best ways to come back to profitability is growth, right? So if you're growing fast, we're very proud to announce Airbnb going live in the US and globally with us and so forth. If you continue to grow that market very quickly and you turn around gross profit and make it much more gross profitable, that's really where the focus has been. So the kind of cost reductions were done already a year ago, and since then it's been gross profitability and growth actually.
Mm. So in the UK and also in the EU, we discuss there's a discussion about regulating buy now pay later. So how dangerous is it for Klarna and the growth?
You have to remember that a few years ago, over 10 years ago, I was in Frankfurt and I signed the acquisition papers for Sofort, which was super scary back in the days, because at that point of time, open banking wasn't yet regulated, PSD2 wasn't yet applied, and I knew that there was a risk that this whole thing would be deemed, non-compliant and be regulated. So it was fairly scary. I think we paid 140 million euros for Sofort. Since then, I spent a lot of time in Brussels, and I've been trying to make Brussels understand that the big problem we have in banking is lack of customer mobility, the inability for customers to switch between banks. The easier we make it for them to switch, the better competition we'll get, and the less banks will worry about milking profits and more worry about how to provide best value for their customers. So when I look at the regulation that's being discussed, I actually am kind of two-sided to it, because the funny thing is, after we started trying to educate and tell Brussels about open banking and the benefits that it could provide, I remember being in a taxi once to Bratislava to meet some EU officials, and we were looking at our growth numbers of number of consumers, and we realized, like, you know what? We were at that point of time, I think, hitting over 30 million users in Europe, and we're like, wait, is open banking still beneficial for us? Because yes, it will mean that it will be easier for customers to switch to Klarna, but it also means it will be easier for consumers to switch from Klarna. And so you gotta start asking yourself, like, should we really push for this? But because we believe it's in the best interest of the consumer in the end, we said, like, whatever, we have to do what we believe long-term is going to make the market better, and then rather adopt to it and try to be competitive than try to put blockers up for competition just to save, the quarterly earnings of the next quarter. So I think that the ironic thing now is, as I see regulation, the point is that buy now, pay later is a better form of credit than credit cards. Credit cards charge higher interest. Credit cards suggest to you that you should put all of your purchases on credit. Why I want to go back to how credit cards used to work. When I was a kid and I worked at Burger King, when you swiped your card, you pushed 1 for debit and 2 for credit. So you had the option at every purchase to decide between debit and credit. Why did the banks remove that? Well, the problem was when people did that, they didn't build up as big balances on a monthly basis. So when they got the credit card invoice or Rechnung, the amount they had to pay was lower, and they revolved to a lower degree. They borrowed less money and made less money for the banks. So the banks removed it. That was a healthy choice. we want to reintroduce one for debit and two for credit. And the second thing with buy now, pay later, it's not revolving, it's not Ratenkauf, it's installments, the way German always liked it. Germans always liked installments, it was always the preferential one. Germans are wise about this. You are the biggest savings country in the world. You're wise, you should use installments. We're bringing installments to the world. We're bringing Rechnungkauf to the world as an alternative to credit cards. So I feel that like, once you get the chance to sit down with media, with politicians, and explain this and showcase that Klarna's losses are 30–40% below credit card industry standards, which showcases that consumers are using this more responsibly. Our average credit is $100, why $6,000 on a credit card, then people feel convinced about it. But the ironic thing is, as they're still pushing for regulation, and as the banks and all the vested interests that want to see less competition are pushing for regulation, it's actually not Klarna that will be affected. It's the next fintech startup that will find it harder to onboard new customers, will again create more friction for switching. And that's just the ironic thing that I'm in. Like, you know, I'm telling politicians, to be honest, like from a Klarna perspective, put in the regulation, make it hard to switch, protect my consumer base, make it less competitive. But is that the right thing for the consumer? The opposite. We need more mobility. We need it easier to switch. We were supposed to protect privacy, so we created cookie acceptance on every freaking website. And that was somehow protecting privacy. Now we're all wasting, I think in EU, 350 lifetimes a day accepting cookies, and people don't even read the text anymore. Creating friction for using new services may sound like consumer protection. What it really is, it's big companies trying to avoid competition. If WhatsApp has a freaking bad terms of use for privacy, the easiest way to make them fix that is to make it a click of a button to switch to Signal, moving your customers, your messages, your friends, everything through a click of a button. If you create true mobility, you create competition. If you create competition, you force consumers to companies to focus on real consumer value. And that's what I've been trying to push and tell. So you know, that's our view on the buy now, pay later regulation.
So you recently said in an interview, so fighting fire with fire is quite efficient. So credit has a role to play, and we provide a healthier form, like referring to what you just said. But isn't it possible to change the way technically how people spend money? So we have like a kind of movement of companies with a service called Save Now, Pay Later. So isn't this a healthier alternative to?
I think so, absolutely. I think in general, look, that's fair. And I think I'm not saying that Klarna did not overstep. I didn't say that we made a mistake. When we started this business, I didn't reflect on late fees. I didn't reflect on the consequences of society of credit. I built a Rechnung service and went to compete with the banks, and the banks were charging high interest rates and they were having late fees and all this. So we copied paste their business model and said, okay, apparently that's how you do it. Let's do it that way, but let's make it more digital native, right? Over years, I realized late fees is not a good thing. You can get hooked on it as a bank. You can start depending your business model on late fees. And then you're in a very bad place, because which CEO is going to go out there and lower the late fees that has a significant profitability impact when they're 2 years out of retirement? The benefit is I'm hopefully not 2 years from retirement, but 2 decades. So I'm willing to think about this really long term. And in that case, your incentives and your perspective changes. We cut out $100 million of revenue in late fees and high interest revenue about 2 years ago. We've suffered from that from a revenue growth perspective, but we believe that long term, it's the right thing for customers. And it's also because I think competition is going to increase. Like, there's apps nowadays. There was some examples, like my vision of where AI is taking banking is that you wake up in the morning and your financial digital assistant will tell you, hey, I realized I could save you X amount of euros per month by moving from this interest-bearing account of your loan to this one. And I will do the change for you. In that world, all the creepy tricks that banks have played on us to help, to try to charge as much interest rate as possible, they're gone. They're gone. Because you will have full data mobility, full customer mobility, and an assistant that optimizes on their behalf. So from that perspective, like, I want to avoid business models that are built on, if you watch Credit Cards Explained at Netflix, you'll see all the bad tricks that banks have been playing. You have to avoid them. You have to lean into the good stuff. With that said, should credit be used for everything? No, I agree. There should be a debit option and a credit option. Should we entirely restrict credit? Unfortunately, a lot of research has shown, in the UK is a good example of that, there's been a lot of research that if you entirely restrict credit in a way where it just becomes unavailable to a subset of consumers, overly restrictive, then what you end up happening is those people borrowing from friends, from family, or from the shark guy at the corner that's shady and beats you up if you don't pay on time. And so like, it doesn't go away. It's a natural behavior. It's a natural feature that we need in our lives occasionally. I've been out of money. I used to go on the, the train between Uppsala and Stockholm, and I didn't have any money on my debit card. It cost me a lot. The overdraft fee was bigger than the ticket price. But I had to get to Stockholm to go to work. So like, it's easy to sit in a nice, beautiful room and discuss this, but you have to remember the reality of people. And credit has a purpose to play in society. We have to promote the right forms of credit. We have to promote competition so the right forms of credit win over the poorer forms of credit.
Mm-hmm. So just the last question for you. So what are you doing or planning to reduce overspending? So that's the problem in the end.
Yeah, so I mean, there are multiple ways to do that, obviously. I think one is that we have tons of budgeting tools in our app where you can set up your budget, you can set up restrictions, so you don't spend more than you're planning to. I think now with AI, there will be even more opportunities to kind of advise you, suggest to you, and then obviously at some point in time, as a bank, we need to financially underwrite. So if we see that there's simply a too big risk, or our assessment is that you will not be able to repay or you're borrowing more than you should, then obviously we will reject as well that specific form of credit. So there's multiple ways of doing that. But again, people have to remember, like, when you use buy now, pay later today, you maybe use it for a €100 purchase for 15 to 30 days. There's other credit forms in the world that have a much more significant and dangerous impact on consumers' lives than that form of credit. So there's been a little bit of overfocus in my perspective on buy now, pay later as such, when there are other forms of credit. That doesn't mean that I think we have taken a lot of decisions and changes, and we are learning also. Sometimes our marketing was too aggressive, we promoted in the wrong way. We've done tons of errors and mistakes. Like, do please understand me correctly here. But I think at least what we're saying is we're learning, we're optimizing, and we're trying to improve that. And we see it primarily through our losses. Our losses are lower than industry standards. That to me is, like, in the end, the primary metric that shows you whether you're underwriting responsibly or not.
Unfortunately, our time is up. Thank you very much, Sebastian, for your time. A big applause for Sebastian from Klarna.
Thank you so much for having me.